Okay, let's move on and let's just quickly revisit where the market has settled in at. And it's still pretty, tempered and quiet. In fact, we've slipped into the red now, 23,380 after what looked like, in any case, a very nimble sort of start. Trent is your biggest loser today. It's now struggling to stay afloat above that 6,000 rupee per share mark. There's Dani, ports and banks. They are the ones which are really facing the heat. Kotak, SBI, HDFC Bank, Axis, IndusInd, they're all your laggards today. Let's welcome on board then Sudipta Roy, MD and CEO at L&T Finance, joining in on the show right now to talk about how their numbers have been. Sudipta, great to have you on the show. Tell me how the overall macro environment has been, especially microfinance as a segment where the industry itself is facing issues.
Yeah, so if you see the macro environment, especially on the microfinance sector side, has been going through some challenges for the last couple of quarters. In fact, the deterioration in the macro environment started around April, May of the last calendar year, and on the back of severe heat waves, and also there was a general election during that time, in which also we saw some slowdown in some of the government spending during that period as well. Post which, we had a very good monsoon, but the fact is that during the course of the monsoon, some of the states had got hit by sort of debilitating floods. There was a flood in some parts of in Gujarat, and there was like a massive flood in Bihar, and which impacted a lot of our customers as well, and led to a lot of displacement of people, temporary displacement of people, which also impacted our collections efficiencies, especially in the microfinance business. As we also, what we saw was that, there were some adjacencies in the two-wheeler business in which we saw certain macro challenges related to the rise in credit cost in the early part in April and May in the two-wheeler business as well, which has settled down right now. But the fact is that because of that, we have been very cautious in our disbursements, and that led to a holding pattern in our two-wheeler disbursement. And because of the challenges that we saw in the microfinance sector, it has led to a sequential degrowth in our microfinance segments, because we implemented a lot of strong credit guardrails, and we made sure that our disbursements during this period is made to absolutely solid credit customers in this sector.
How much pain is still left in the microfinance business? Because 30% of your AUM is coming from there.
See, if you see from the last quarter, obviously the pace has slowed down a bit. But what has happened is that we have seen some green shoots of collections efficiency stabilization in Q3 FY25. And, our collections efficiency in the month of December crept back to about 99.4%. And in the month of January also, we maintain a holding pattern around that. So we are hopeful that the situation has stabilized relatively, and almost probably we are seeing a bottoming out of the situation. And given the fact that we had good monsoons, we had good Kharif arrivals, the Rabi sowing has been reasonably satisfactory. So there is an expectation of a good Rabi crop as well as improvement of rural liquidity. We expect that the situation will continue to improve. The MFIN 2.0 guardrails have been implemented, some partially implemented from January, and the next implementation will come from the month of April. And I do believe these are steps in the right direction, which will actually help the lenders with better quality franchises, and it will help the industry sort of navigate the situation probably much faster. So we are hopeful of an improving situation in the next couple of quarters. And I know our assessment is that probably we are seeing a bottoming out of the stress in this sector.
Hi Sudipta, this is Shrishti also joining in. But if we look at some of the internals, then the company did utilize 100 crores of the macro-prudential provisions in Q3 of FY25, which has led to the reduction in the credit cost. But what will be your outlook on the credit cost and the asset quality going ahead in Q4, and your outlook on FY26 financials as well?
I would like to point out that the decision to use the macroprudential provisions was done with great deliberation and after due approval from our audit committee. As you are aware, these macroprudential provisions were created earlier on during COVID period, primarily to create about 975 crores of macroprudential provisions that we are holding, and we created this out of operating profits, especially for situations that we saw sort of run out over the last couple of quarters, wherein we saw stress in the microfinance portfolio from heat waves, floods, etc., and temporary business disruptions. Our board approved the usage of 100 crores of macroprudential provisions this quarter. Obviously, a portion of the book that had seen some credit stress has been flowing, and this book will continue to flow over the next quarter. So we will, and that's why we have also given out a guidance in our analyst deck that we will intend to use anywhere between 300 to 350 crores of macroprudential provisions next quarter. Our endeavor will be to use less, but that is the sort of the limit that we have stated it out. Given the fact that the book is flowing, we expect that our credit costs to be remain elevated next quarter as well. However, we expect that a gradual normalization of credit costs will start from Q1 FY25, and the business will get to a more or less BAU trajectory.
Right. So for how many quarters will the company utilize this provision, and how much is the total provision that you've created?
The total provision that we created were about 975 crores, especially for our rural business finance and the MFI business. Out of that, we will probably use about 450 crores between these 2 quarters. That is what we have set out in our investor deck. And one other thing that we have set out is that our overall credit cost for the microfinance business for the full year will be in the range of 950 to 100 crores. It's not like a magic one that, after Q4, the entire credit cost will disappear. It will show a gradual downward decline. Our objective will be, and obviously this depends on how the overall macro trends pan out and how the other lines of business also step into push the needle on both disbursements, income generation, as well as credit costs. Obviously, the credit cost will go through a gradual decline over the next 3 quarters. And what our endeavor will be that, right now, it is very difficult for me to give a prediction without looking at how the collections trajectory, etc., pan out over Jan, Feb, March, and maybe, in Q1 FY26. But our endeavor will be to use as less as macroprudential provisions next financial year as possible, but probably a firm guidance on that would be possible after seeing the credit cost trajectory in Q4 FY25 and some initial trends in Q1 FY26.
But will you be able to achieve your Lakshya 2026 targets, or will you make any changes to the same, especially on the ROA and the GNPA front?
See, we remain committed to achieving the Lakshya 2026 services. Many of the target parameters have been met. The retailization target parameter has been met, and though our CAGR growth rate has been 25%, this quarter is 23%, and primarily this is self-driven. We have tempered down our disbursements during this period just to be cautious. Still, we are at a 23% year-on-year growth rates in terms of AUMs. The only thing that has probably seen a little bit of change this quarter is primarily the ROA trajectory, and driven by the little higher credit costs that we have seen this quarter. However, we remain committed to that ROA goal of 2.8 to 3%, and we are hopeful that as we see tempering down of the credit cost towards the latter part of this calendar year, our ROA trajectory will resume towards that Lakshya targets. So as of now, we remain hopeful that yes, closer to the conclusion of the Lakshya 2026 targets, we will be trending close to that 2.8 to 3% ROA trajectory.
Right. So how will digitization, play an important role in your growth? And in your analyst day also, you focused on digital transformation. Now that you are saying that you've launched several AI-based products.
Yeah, so if you have looked at the analyst deck that we had presented during the digital day, we have actually, bucketed into, a couple of boxes. But, our digitization efforts are on four sort of main axes. One is what we call onboarding intelligence. The second is what we call credit intelligence. Third is portfolio intelligence, and the last is, service and operational intelligence. So what we are trying to do is, in each of these blocks, we are trying to use the latest cutting edge digital tools in terms of machine learning as well as AI supplanted what we call applicative AI in these processes, and trying to see if we can force multiply some of the benefits into the organization, and finally that can flow into the bottom line. Now, the first two blocks that we picked up actually for was obviously credit intelligence and the onboarding intelligence part. Now, the fact is that in the credit intelligence part, we have done quite a lot of work. And if you see our three-dimensional credit engine, which we call Cyclops, has been working quite well. Our Cyclops engine actually was operationalized for the two-wheeler business in a beta mode in June 2024. And now in December 2024, the entire two-wheeler business is now operationalized under Cyclops. We gradually scaled it up. Now 100% of that business is under Cyclops. We operationalized Cyclops for the farm business in December 2024, and obviously it is under scale up right now. This quarter, we'll operationalize it for the SME business, as well as we will start work on operationalizing it for the personal loans business. So overall, on the credit side, we are doing a lot of work, and it has shown a lot of early green shoots of results, which we have included the details of that in our analyst deck.
All right, so stress in the microfinances seem to be bottoming out. That's the word coming in from Sudipta. But with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us.